What's up? What's up? Welcome to day 13. So today, I had a lot of schoolwork last night and it was due. Not gonna lie, I procrastinated a little bit. Anyways, I got it done around like 12 o'clock, and so I woke up a little bit late today. So today I am just going to do the practice. I don't know what ICT calls it, but it's like basically you just practice taking trades without having a bias, just by use, or you could have a bias, it's whatever, but just taking a trade on everything basically. So like for example, like this order block paired with this gap, I would have taken a trade there short. Let's see, there's a little gap here followed by a bigger gap here, so this would be inverse followed by a little one, so you could take a trade there. Order block here, price traded but here, so all those things. There's an order block here, price wicked inside of it, you could take a trade there. So just all those things. So right now we have a, let me see if I can, I wonder if you could make another account. Oh, you can. Just gonna call it fun. Fun create. Alright. Alright, so we are trading off of this order block here in the 15 minutes with this gap. So we are going to take a trade. Put our stop loss below here. Our take profit above here. Oh, we got stopped out. We're gonna go this guy. Trade there. Now this exercise is whether you win or lose. You're just taking the trades off of what you see. Sorry about that. Allergies. Alright, well, full body close there. Alright. Like, usually, I probably wouldn't take this trade. But I just like to see how it feels while I'm inside the trade. And then also, you know, you kind of learn how price, it makes you aware of how price books. So we go to our 15-minute here. So we are trading on the daily chart. We've traded into this order block here. The mean threshold being here, we just wicked inside that and rejected off of that mean threshold. So we could definitely see a lot of downward movement to take out. We have sell side, minor sell side there, and we have major sell side, or probably also a minor sell side. Sell side, sell side. So I have a lot of sell side here. Liquidity. Right. Now out of this range here, our below equilibrium is here. So we'll have to take a trade opportunity anywhere below equilibrium. That's where I messed up here. Or why the trade was low probability. This is just a confirmation of, looks like on the 15, we're wicking above it now. Have a order block here. Taking out minor sell side here. Honestly, on a higher time frame, the only liquidity that is left on the higher time frame is up here. Probably won't be reaching for that liquidity today. Actually, there's some here too, right here. Probably some buy side there. All right, we wicked below that sell side. So now we have a we will take a buy here. I'm actually just kidding, do market order. I'm gonna take one there. And then buy. And I could be wrong on all of these. It's not necessarily how my strategy is, or it's just watching price and taking trades, basically desensitizing myself to taking trades. So, and it's actually been a very good drill for me. That's helped me. Yeah, just desensitize myself. So this is one. So even you can learn from yourself doing this drill. For example, I had a limit order right at this line, and instead I put a market order up here because I was scared I was gonna miss the move. So it kind of helps you recognize your psychology. I should have just like left my market order there and let it get hit. Instead, I did a market order, which it could have ran without me. But so that's something that I do actually, like when I'm trading my demo account that I'm trying to grow, which I recognize that, and that same habit I've done here. So it's just a good indicator to me that um, that I need to fix that habit and let it demand the market or demand price. Have rules on price. If it does this, then I'm in. If it doesn't, then I'm not, and that's okay. So, because that entry right there would give me an ultra low stop loss right here, just below here. So, right, we're respecting order flow. So this body of this candle should not drop below here. We've taken out a minor sell side here, went up. We have an order block here. Price came down into that order block. It wasn't consequence encroachment, or it wasn't mean threshold, but it was hitting the 25% retracement level inside this order block. All right, we're just bouncing. This was at 11:02, so 10:10 or 10:50 to 11:10 macro. Should be looking for sell side. We left relative to equal lows here. And we still have a lot of sell side that I annotated down here. So I guess you could say I have a demo account that I use for like to measure growth, and then I have a demo account, which is this one, that I use for just practice. I guess they're both for practice, but they both have different purposes. One is for more like I trade my trading setup is the 930 fair value gap. And then I want to trade aiming for liquidity from London session is kind of what I like to trade for. That's my optimal setup. And then this one is just this account is basically just for practice, just taking as many trades as I can. with whatever it presents to me. All right, so we went down to the 25% retracement level inside this order block. Price is moving higher. And doing this trade is very, I would say it's how would I say, liberating? I don't know. Like, it makes trading seem a lot easier than what it actually is. Or I guess so. You could say trading is easy with the right mentality. But it just makes it seem like, oh, trading is not that hard. You just take entries off of entries. And I wish I could afford. I mean, I could afford. I just don't want to pay for it yet. The 15-second and the 20-second chart. But the 1 minute is good for now. But yeah, I just watch order flow. So just watching these order blocks that are being formed, and just watching how price reacts to those levels as I want to see these support my bias towards my target. So now we have this here. I'd like to see remained unbroken through with a body. We should have some form of rejection here. I'm gonna move my stop up to here. And I'm going to take, actually here, this is what we're gonna do. We're gonna take one off here. No. Wow. Alright, so now we are rejecting off of this. This is a breaker. I'm not sure. Don't quote me on that, but I think this is a breaker. So we got a breaker. Or not a breaker. I don't know. Mitigation block. That's what it is. I'm sorry. Mitigation block. Came back, got into the midpoint of that wick. Now we have two things. We have a fair value gap here. Fair value gap there, and a order block down here. So technically, in this range here, if we are bullish, we can take as many trades, according to my strategy, we can take as many trades as we want below, long as it's below the 50% retracement, or the 50% retracement level, which is right here. Because after it gets up into here, then it gets lower probability, because now it's at, a premium on the shorter time frame at least. And we are trading a premium in the daily off of this. We're trading at a very high premium. All right. So we will take a trade there. Put our stop loss below there. And then we're gonna watch and see if we can push through this. We wanna see a very aggressive push through. We need it to break above here. If we are going to go and take out this minor sell side here, we need it to break above this. Alright, so we have a possible... So if price breaks down below this now green candle here, and it supports it, then we'll have a change in order flow. So we haven't broken below this block here. But if we do, and we come back and support price, then we will have a change in order flow. The reason is because if we move up and we have two red candle, or we have red candles, you know, and then a green candle, which creates an order block, and then we have price trading below that green candle, which would be an order block, and we come back into it and trade down, it's just changing or delivery order flow. Because instead of the red candles supporting price, or the order blocks supporting price to the for bullishness, instead it would be the green candles supporting price down for bearishness. So that's why if we had broken below here, we would have been looking for a possible, not it doesn't, it's fluid, but we would be looking at it breaking this here if we were wanting to go higher, which it did here. So now it's a higher probability that this is going to continue higher. So now have that, this possible fair value gap formed, we will take a buy here. I have 29 seconds on this candle, 26 seconds. Let's see what it does. All right, now we hit the 50% or mean threshold of that order block. Technically, this is all one, but so now we're looking at price being supported by this fair value gap and this order block here. Triggered in for my third position. I'm gonna move my stop to here because it looks like we are about to break below here. So price, if we break below this here, then we will probably, the reason why I didn't want to take a trade here is just because we got up to this level where there's a high probability of price rejecting off of this level, which honestly I probably could have just taken a sell off of that, but yeah. Now we're going to watch price and see how it reacts to this. Can we wick inside of it and then trade higher, or are we going just to go down and go for this liquidity here? So you could, I guess I could have used, just thinking out loud. We could have used this range here, this very micro range, where we could take buy here, here, and here. We can take all these buys, but as soon as we hit above a equilibrium, we wouldn't take any more buys once we go above that equilibrium. All right, so we have a change in order flow. Just remove these. So now what we're gonna watch for is if we can make a swing high here before taking out this sell side. So we've already taken out minor sell side here. So if we can make a swing high here and give us like an order block to enter off of, we can aim for this buy side, this buy side, and that buy side. So what we're looking for basically is, do we want to continue down to take out this sell side, or was this sell side efficient enough here for market to want to reach for buy side? Have a volume imbalance here. And what time is it? 10:27. All right, so we are dipping down. Showing some support, and prices being supported by this order block here. All right, now what we're gonna want to see is price to move up above here, and then we can look at trading off of this guy here. So now the price should respect this. If we are going to continue to go lower, price should not move above this candle's high. We've taken out minor sell side here. We could be hunting for this down here. This up here was a really good opportunity. I was sleeping. Not gonna lie, I was sleeping. Because what we have here is a break off of a major daily time frame area. So this is the midpoint of that order block, and we broke below it, and we retested that here. So this right here would be a really good trade. You can use there's an inverse fair value gap here you could use. There is let's look on the higher time frame, 5 minute. There's also a fair value gap here on the 5 minute. So really good entry right here, and we could aim for this sell side, that sell side, and then, you know, terminus. All right, well, we went back up into this, so now we're watching to see if price will hold here, if it'll wick here. If this moves up and we wick down, I might take a trade off that to go lower. We do have this fair value gap that we might try to paint over. Paired with the volume imbalance. Hmm? All right, so now we're just looking at okay. All right, so sorry about that. So right now we're looking at this candle for price to go into it, or trade in this fair value gap. So far we're leaving this open. If we do leave that open and form structure, we could definitely see it reaching for this buy side up here. We just dipped below this sell side with one wick, traded up with some aggression, and yeah, we'll just wait to see what happens. It is coming around to be 12 o'clock, so I mean, I need to probably get off for the day. But yeah, it was a really fun drill that that I like to do for practice, and yeah. And it doesn't matter if I'm profitable or not with this drill. The goal is to get better. So get better at entries, get better at taking profits, all that stuff. All right, well, it's moving on into lunch. 11:30, 12, moving on at lunch. So I am probably gonna end the stream. Gotta take care of some stuff around the house. Take care of the kiddos. So, alright, well, it was a fun day. I love this drill, honestly. I really like being able to just take trades, just get in the market, because so many times I think the downfall for people is wanting to. I think for me, I wanted to say in my mind that I didn't care to be right or wrong, but I think at the end of the day, I cared to be right or wrong. So this drill really helps me not have that fear of being right or wrong. And for the most part, besides these two trades, I was on the right side of the market. But yeah, I think this drill really helps traders have more fun, I guess you could say, with being able to entry instead of just waiting all the time for that perfect setup. Being able just to trade order flow, and yeah, not really caring if you win or lose, but just get a feeling for, or getting a sense for how you feel during the trades, getting a sense of yeah, how you feel, and what you're seeing in order flow, and how it holds up, how it supports price. On top of that, it helps you gain that experience of reading the market, and seeing the same thing happen over and over and over and over helps you not have that fear to take the trade, because whether you win or lose, you've seen it 1,000 times. So the trade is highly probable, right? So it's a probable trade since you've seen the same thing play out 1,000 times. Like, for example, this zone here that we're trading in is that order block, and so many times I've seen order block being traded to on the daily, and if we watch the lower time frame, if we see how price reacts to that level, we can usually get a good trade off that. So even this right here, this is the 25% of this daily order block. He even traded down there perfectly, found support off of that 25% level, and moved higher. So it's trading with these levels on the order block. Even right here, this position here, this was at the 25% retracement inside that order block. Price went lower. We could take some trades in here. Once we get confirmation that there's a change in delivery or a change in order flow, we can look for sell side. It doesn't mean that we're going to look for the lowest sell side, but yeah, even right here, this area here, through inside this order block, it broke below that order block and then traded back up into it, and went higher to take out that. So even right here too, we traded below that order block, went up above it, gave us a trade entry here, and then huge momentum towards the upside. So yeah, see, anyways, very fun. I love that that drill, and I do recommend that for anyone, experienced or beginner. So all right, I think actually I will take one last trade before I leave here. Take one buy here. Then I will take another buy here if it goes down there. What I used to trade moving averages before I came across ICT. What I love about trading price action, like absolutely love, is I'm not, how would I say, not waiting for the crossover of moving averages. I also put some other stuff in there like order blocks, but instead I'm just entering off of levels, and it makes it so much easier to enter off of levels after you've traded with moving averages for a long time. It's so much easier to be able to take a trade off of levels instead of off of a moving average. See, like right here, right? This is a good example. So like let's say, for example, let's say, what is this one? So 50 is 2. Here, let's do 1. Let's say, for example, you wanted to take a trade off of when the price goes below the 21 moving average. You would have been trading on this candle here. So your entry might have been like down here, because you have to wait for that candle to close, right? So your entry might have been down here versus your entry being right there at the 25% level of that order block, which is perfect, right? So that is why, for me, I love trading ICT stuff, because it's so accurate as far as like I'm trading in this green candle. It doesn't matter. And then look what price does. It goes way lower. So I'm getting like the optimal entry with a short stop loss, risking little to gain a lot with tight stop losses. So that is what I love about ICT's stuff. Of course, moving averages, I mean, they can be traded. It's just sometimes really hard to trade. Because, like, for example, this candle here, you would have probably got entry somewhere up here as soon as it crossed over. And then price will just start to climb down on you. And you're already almost in red this whole trade. Like, not any profit. If you took a trade here, this one wouldn't be a bad one. Trade down to there. But if you waited for price, like this candle here, got in on that candle, it keeps your stop loss low, and it keeps yeah, you're gonna make a little bit more. So even though it's finite, it does help mentally to I don't know if finite's the right word, but even though it's a little bit of difference from getting an entry here versus here, mentally it's a lot. It's nice to see when you enter here and price rejects immediately versus when you enter down here and you're in drawdown a little bit. So
Dad, I'm ready to play, Daddy.
okay, that is coming. All right. So now we'll take one off here. And then we will have our target here. I'm gonna move my stop loss to break even. And then we'll see if it just a move. Actually, I think I'm gonna take my full position off here. No. Yeah, I'm second guessing myself now. So the reason why this trade I feel like should go in our direction, we took an outlier sell side here, came back, took sell side again here, very little wicked it, and we traded inside this order block, went above it. I would like to see the only reason why I don't reconsidering is just because of this area here. We have a volume imbalance and a fair value gap, but where are we at in price? If I could, I'm talking to myself here, but we are at a discount. According to this range, we're at a discount inside this range. So we should be able, we failed to go lower. We took an out sell side here. We failed to go lower after taking that sell side. And so we should be able to move above here, at least above here. So that's what we're going to watch for. We have a break of this swing high here, swing high, and then a higher low, then a lower high. Then we made a higher high here. All right, now we can look at, we want this candle to be broken. We're trading inside that volume imbalance. That's why this candle wasn't able to break above it the first time. And then we got a break here. And I actually need to see where we're at. Over the past month, trading ICT, it's been, I don't know how to say it, very, I don't want to say, like, there's a freedom feeling, like, there's like a freedom to, maybe it's because I know what I'm looking for or how to read the price action. I think it's just, how I know how to read price action, at least a little bit. So it's very, very freeing. Oh no, the feeling is really nice to be able to get in here without fear and just trade price action. Just what is it doing? What price level should it respect? What candle should be held support? What candle should hold the price higher? All those things. Okay, trading inside that volume imbalance. It would be nice if we could wick above this volume imbalance here. We do have a fair value gap here, and we will actually take another buy here because we're doing drills. We're doing practice. Alright, so we wicked above that. We didn't full body close this volume imbalance because this became an inverse volume imbalance. So we went down in that, we wicked above it. We want it to hold price higher. If it doesn't, then we'll exit the trade. But we're in a period of consolidation. As you can see, consolidation has been forming. Alright, looks like we're still wicking above the volume imbalance. I'm going to go ahead and put my stop loss to break even, just below this order block here, and see if we can finish and take my target here. It is so beautiful. It's amazing. Oh man, look at that. Volume imbalance, just wicking it. The body's never closed below it. It's crazy. And then we're gonna go waiting for it to reach my target. Got 30 seconds left of this candle. See what it do. At this point, now we could have a change in order flow. If we break below this candle, find support off of it, we could go down to here. The body barely closed in that from that volume imbalance, just barely. Some of this would be, for retail logic, would be a bullish or a bullish flag pattern, or a pendant, or a triangle. So we want this candle to be broken. That's what we would like to see, for it to break above this candle, this green candle. It is 11:57. We need to see some movement on this candle here. Come on. Come on. Oh my goodness. Well, if we ever get there. There we go. See if we can get this body to close above that. It'd be really nice. All right, now can move this here. We're so close. It's not even funny to hitting our target. But I'm gonna wait. I'm gonna wait. As much as I want to take that off, I'm gonna wait. It's probably gonna go up to here, but I'm gonna wait. Bruh. Just wicking it. Like, this is not even a tick away. It's funny. Come on. Ah, it hit it. Should I take it off? Come on. There you go. There you go. There you go. Okay. I was like, if it reverses right now, like, really hard, that'd be funny. Okay. Alright, well, just doing our practice, we are up $51 today. Not bad. Just doing our practice entry. Just taking every little trade. So, alright guys, well, that is, how many trades did I take? 1, 2, 3, 4, 5, 6 trades through, what is this? From 11 o'clock to 12 o'clock, I took 6 trades. And, I had 1, 2, 3, 50% win rate. So 1, 2, 3, 1, 2, 3. So I lost 3 and won 3. But my losses were smaller than my wins. So, all right, guys. Well, I hope you guys enjoyed the stream. Definitely recommend practicing reading the tape, reading what market's doing, what it should react off of, what it should do. Very, very helpful. Has been really helpful to me. So, all right. We're trading up into this, above this, and getting into a premium price, so that's why I'm not going to take any more trades at this level. But, this is, has been very encouraging, for me today to be able to do this live, to be able to just trade price action within a 1 hour span. To be able to trade up and down, has been very encouraging to me. So, all right, well, I hope you guys have a lovely